What's going on? Welcome back to Financial Journey. So today I want to talk to you on Rivian. I want to talk on this upcoming week, what might cause some volatility in the stock price, what the current data points are saying, and everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So Rivian did go down 0.34% on Friday, which was the last trading day in 2023. So we can kind of look back at some successes, some failures. So based on the stock price, it did go up 35.29% in 2023. Comparing it to a lot of other EVs, Rivian did phenomenal. And this is why I've said time and time again, Rivian is poised to be the number 2 spot next to Tesla, potentially even by 2030, maybe taking over Tesla. Maybe that's a little too optimistic, but aside from that, very good stuff for 2023. And as well, with 2023 concluding, we can kind of expect to see some numbers coming out sooner rather than later. So this was posted on Twitter. Even though Rivian Updates is not official Rivian Updates, it does show that maybe we can expect to see some Q4 numbers as early as January the 3rd. That would be very optimistic, really help Rivian stock price, because I do feel that they did hit their targets and they're going to exceed their 2023 target. So that's just my own opinion, of course, not financial advice. You guys always do your own due diligence. When it comes down to this upcoming week, though, there's a lot of volatility, and this might make or break the Santa rally that the broader market has been on. Of course, today is closed, New Year's Day. Happy 2024. Happy New Year's, everyone. Hopefully 2024 is going to be a lot better than 2023 for a lot of individuals, portfolios, and whatever else. But as far as data points this upcoming week, starting off on Wednesday, January the 3rd, FOMC meeting minutes. And so, of course, that is what kickstarted this whole Santa rally. A lot of people were anticipating that there's going to be cuts sooner rather than later. So to see the meeting minutes, that is going to once again shake the market, because if that is opposite, or maybe the wording in the minutes is going to be different from what the market interpreted, then yeah, this whole Santa rally could just fall apart very fast, or potentially could continue that. So let me know your thoughts on that. I do want to play this quick video though. It is going to be about a minute long. It will kind of talk on how the broader market is overreacting to potentially the Feds cutting sooner rather than later and everything else. So once again, I'm going to play this that's more correlated with this aspect right here. Thursday though, ADP non-farm employment forecast is around 113,000, and then on Friday there is non-farm payroll, and that is anticipated to be around 163,000. Both of those indicators are very linked to consumers, so we'll kind of have to wait and see as far as that goes. And then aside from those three things I mentioned, there's a lot of Fed speakers throughout the week that could cause a lot of volatility. So I'm going to go over a lot of the data points and everything else, but like I mentioned, I'm just going to play one quick minute of this, and that'll put it in perspective on how important Wednesday is to the broader market.
Scott Wren of Wells Fargo here. As we wrap up this year, we're looking at a 24% gain or thereabouts on the S&P 500. Sure, it's been a little bit top heavy, but the rest of the market has started to participate. Is it too much too soon, or can we now trust this as the trend?
Well, Mike, I think there's a couple of problems going on, or a couple of potential problems going on. One is I think the market has some upside here because, let's face it, there's 150 or 170 basis points priced in terms of Fed cuts. We're looking for 2, maybe 3, something like that. And then also the consensus estimate on earnings, in our opinion, is too high. It's about 245. You're hearing some 250 numbers out there. We're at 220. So I think right now inflation is going to continue to come off. I think the market is overestimating how soon the Fed's going to cut and how much. And then I think they're also a little overly excited about the earnings growth for next year.
So yeah, ultimately kind of goes on to elaborate a little bit more, but that is, and puts it in perspective on how important Wednesday is. And he's not the only analyst as well to really talk on how they anticipate inflation to continue to go down. So the next round of CPI data that is coming out is on January the 11th. So a lot of analysts have kind of as well said that the market is going to have a pullback, more of a realization that the Feds aren't going to be cutting rates sooner rather than later until January the 11th. That is what is going to propel the market higher. A lot of analysts are saying different things, so we'll just have to wait and see. But when it comes down to some data points, let's talk on, for instance, shorts, what they did on Friday and what they might be doing this upcoming week. So it does show right now no real change because with obviously Ortex, it's kind of messing up with today being a holiday, but 13.28% of the free float is being shorted. 89.08 million shares overall are being shorted. Cost to borrow average isn't really showing right now because, like I said, of that glitch being a holiday, but through interactive broker short availability does indicate that there is more than 10 million shares available to be shorted, but cost to borrow average is 0.32% through interactive brokers, but they typically charge on the low end, so that's kind of a good benchmark. No matter what though, I'm not saying Rivian's a squeeze play as I've said in the past because the fundamentals aren't there. Utilization is very low, just everything else behind the scenes just does not jive with a squeeze play. But it's good to look at this as a benchmark to see what shorts have been doing over the last little bit. So if we kind of look at this chart, just get rid of a lot of this unnecessary stuff right here. You can kind of see over this last little bit, as Rivian has been going up, the shorts have been returning. So it's gone from around, it looks like almost 16% short interest to the 13.28. So that's kind of a positive thing, shows that shorts do realize that Rivian is justified. So this rally that has happened is very justified, and maybe even more is due to come for Rivian, especially if you do look at a lot of the Elliott Wave technicals. I know a lot of people are big fans of this. It does have the pivot point being 2110, and assuming that Rivian can stay above that pivot point, then it is anticipated based on the Elliott Wave to be between $28.60 and $30.20. So once again, let me know your thoughts on that. The latest analyst ratings, there was one done about 5 days ago, I believe, from Robert Bard. Ben, who does have a 49% success rating, gave a $30 price target. So analysts behind the scenes are still very optimistic about Rivian, as am I. I've been saying that time and time again with Rivian. Even though they're burning through a lot of cash, that's literally the only thing that people can really bring up because they have massive demand for all of their vehicles. They're kicking ass on production. Other than them burning through cash, which is anticipated, there's not really much more negatives to really say. But then again, what do I know, right? So analysts very optimistic. So far, they do have a consensus of $25.63, which does represent a 10% upside. And like I mentioned, a lot of the latest analyst ratings coincide with the Elliott Wave, which was right here. So anywhere from 28 something, so 28.60 to $30.20. If you're looking for a lot of good compiled information, such as analyst ratings, forecast, Elliott Wave, take a look at Interactive Brokers for all this information to be completely free. Link in the description below and also the comments. But moving on, let's talk on options. So based on Friday, the last trading day in 2023, there was $11 million in calls being purchased versus 2.47 million in puts. Sentiment wise, 48% of all the options on Friday was bearish. So people were kind of hesitant behind the scenes somewhat. And looking on the call options that were purchased though, there's an anticipation for it to be above, it looks like around $25 by the end of this week. Well, more so $24.50 somewhat. And looking at puts, it is anticipated for it to be sub $23. So kind of both extremes. Looking right here though, you do see a ton of transactions that did occur after hours on Friday. And that is more so just a lot of ETFs and institutions rebalancing their portfolios. That is typically what does happen at the tail end of every single quarter. So you see some pretty big transactions, 1.15 million, 4.16, a fairly large one, 22.1 million, and then at the very beginning, so 2.75. Let me know your thoughts on that. But of course, looking at some of the fib levels for some strong support and resistance points to watch for this upcoming week, $23.46. It is trading between this P and this R1. So 23.43 is a very strong support, kind of held so far based on Friday. 24.21 is going to be the next strong resistance. If this P does not hold, then you can anticipate 22.65, and that is the S1. So in my opinion, it is good to know and just be kind of conscious of the support and resistance points, but it is going to be the actual data points that dictates what happens with the broader market, more specifically on Wednesday. So Wednesday, you'll be able to find out if the market is going to continue this rally or if this rally is going to break down. So once again, kind of knowing some of the strong support and resistance points is going to be absolutely key, because Rivian does have, and plus even on a side note, I guess as well, looking at some of the indicators I like to look at, momentum shows number of retail investors have been kind of flat. On Friday, they didn't really do all that much. Stochastic though, as with the broader market, is considered overbought. So as soon as there's a negative piece of news that does come out, whether it be the meeting minutes or the consumer data that's coming out, the market is going to be potentially pulling back at the first sight of any negativity. So stochastic right now is at 85, so that is considered very overbought. There is no defined trend right now, but like I mentioned, like it could potentially continue to trend up if that data is good. If not, then it is going to pull back quite considerably to maybe even this 22.16, so this S2. Still overall very healthy for the technicals, and resetting its technicals is still very good, and whatever else. And like I mentioned, $21.10 is going to be that strong pivot point for the Elliott wave. So assuming it can actually stay above that, then maybe $28 to $30 is coming in the foreseeable future. Let me know your thoughts on Rivian. Give yourself a shout out. Have you been buying? Have you been selling? What have you been doing? And do you think that 2024 is going to be as good as maybe 2023, which did have, like I said, 35.29% green for Rivian? So let me know your thoughts. Don't forget to hit that thumbs up and subscribe. Always greatly appreciate that. And with all that said, I appreciate all of you watching.